Well, we're seeing record levels in the United States, but we're really not seeing them anywhere else, which to us indicates that there's still places where there's lots of undiscovered value, lots of places that have kind of missed this big recovery that we've witnessed since the fourth quarter of 2018. And I think specifically when you look at European equities, they've been kind of held back as a result of some of the macro issues that I would argue have held back their share prices, but we still see good value creation. And as a result, we see good investable opportunity in European stocks.
So you don't see opportunities in U.S. stocks at today's valuations?
Well, I think there are plenty of opportunities in the U.S. because, as mentioned in your earlier segment, the upside move has been somewhat lopsided. The FANGs have been heavily benefited from this upside move. There's other areas in the U.S. which have not moved in lockstep. And this is the beauty of a big, broad market like the U.S., and it's the beauty of having the world to choose from. You could always find little pockets of value.
But isn't Europe cheaper for good reason? I mean, they've got Brexit, they've got much slower growth, some people say teetering on recession, they've got super easy interest rate policy that's weighing on their banking sector. I mean, you want to really be there with all those risks?
Well, that's exactly what is scaring people away from Europe. However, when all those forces that you mentioned, all those scare stories, have had very little major influence on the ability for European companies to create value. Yes, at home they face some lower earnings, but don't forget, most of these big European companies are multinationals. They have exposure to the entire world, to the emerging world, to the U.S., and especially since the euro is trading at such a low level. And by the way, that's another factor. When you buy European stocks, you could buy a cheap euro as well. But this translates back to a more of an advantage for European equities that sell into dollar markets and have dollar revenues. So those factors and forces that you mentioned are exactly what's driving down the prices. But what I would assert, they're not really smothering value creation. We're still seeing earnings growth. We're still seeing cash flow growth, despite the fact that they're based in Europe. And hereupon lies the opportunity. The market confuses what's happening macro with what is actually happening on the micro level within a company's income statements, balance sheets, and cash flow statements.